In this tutorial, I'll be going to review a stock called Papa John's Int'l Inc. And that's Papa John's stock. Just click enter and you'll find the information here. The full name is Papa John's Int'l Inc. and its PZZA is the Nasdaq symbol. It's 46.22 US dollars for one stock. Billion size firm, which is a big size firm. It's paying a dividend yield. That's brilliant because it means it's financially strong. Even if the dividend yield is very less, don't worry because that means they're financially strong, because after paying their creditors, loans, liabilities, they still have extra money. That extra money they are paying to shareholders as dividend. So this percentage is the extra money of the firm. So it means they're financially strong. It was founded in 1984. You can also just go to Wikipedia, search this box, see founded here, and let's see when. Let's see. I'll just copy this exactly from Google, paste it here, and I want to see the reviews in Indeed. And let's have a look what employees have to say about it. I can see 9,500 reviews and it's 3.6 star. Read through the reviews yourself and check out the salaries they're paying, the photos, the questions asked. And I want to go to Glassdoor reviews, and I just want to have a look that we have 2,600 reviews, 3.2 star. Read through the pros and cons yourself. Check out the jobs listed, the salaries they're paying, the interview questions, the benefits they're giving, and the photos. And please go to just your patents as well and check out the patents as well. And I'll paste it here. I'll click enter, and nothing appears. What I'll do is I'll just remove this part, click enter again, and I can see patents. Now you can see patents. I just want to point out, please focus on assignee and applicant, because these are people who have full rights of the patents. In 2010 they have patent, 2011 they have patent, 2003 they have 19. No, that's another firm, I guess. That's not the one we are looking at. So make sure that the name matches to the one you're searching. And I think those were the main patents. No, this is another patent, 2010, and then 2005 it has another patent. So it has a lot of patents. Please look for recent patents in 2015, 16, 17, because that means you're still innovating. That's very important. So go through the list yourself. And now let's see in Yahoo Finance what the key executives are getting as salaries. That's very important to know as well. I'll paste it here, and so nothing's appearing. So that's the symbol PZZA from the Nasdaq, and click profile, and I can see that that's the sector industry employees, and I can see all of their key executive salaries have been shown. That's brilliant because that means that they have shown us all the salaries and they have kept transparency, and this helps us build trust with this firm. That's brilliant. Now let's go to macro trend, and I just want to go to price ratio, price book ratio, and paste in the symbol PZZA from Nasdaq. And I want to point out that if the price book ratio is less than 1, that means stock is cheap, it's undervalued, it's a discount. If it's more than 1, that means stock is expensive. The higher the number goes, the more expensive it will get. So let's wait for it to load, and then let's have a look. I can see that the price book ratio is 0, um, because I think the book value is in minus right now. So let's look at the previous one. It is, the book value is in minus, so it means that the price book ratio is always an absolute number. It's always a positive number, but it's a minus because the book value is minus. So don't worry about that. I can see that people who bought in 2019 March, they bought it very expensive because they paid $52 to buy something that's minus 9.97 worth. So they paid a lot of money for something that's in a minus worth. So it's very expensive in 2019, and right now it's 0, but I guess we don't have information regarding the book value, so I think maybe it's in a minus, so it's expensive right now. So if I just have a look in 2016 December, People who bought that time, they paid 309 times more money because they paid $82 to buy something that was $0.27 worth. So right now, even right now, it's very expensive right now. So let's go to other ratios. I want to have a look at current ratio. If current ratio is less than 1, that means stock is risky because liabilities are more than assets. If current ratio is 1.5 or more than that, that means stock is safe and it has a good margin of safety. Please look for 1.5 or more than that. Let's have a look. And I can see that right now it's less than 1.5. It means stock is risky. And if you notice vertically up, you can see that the liabilities are more than assets, which is very risky stock. And let's look at the previous trend. Has it ever been 1.5 or more than that? That's my question. So yes, just once in December 2010 it has been, but there's no consistency. So I can say that since 2005 consistently it is below 1.5, so it's a very risky stock. Let's look at debt equity ratio. I'm looking for zero point 0.5 or less than that for it to be safe and have a good margin of safety. This ratio will tell me if the company is mainly operating on debt or equity. I can see that right now it's a minus because equity is in minus, so it has ratio has taken the minus sign from there. So I can see that the company is mainly operating on debt, and this is very dangerous because the equity is minus and the long-term debt is positive sign. So that means company is mainly operating on debt, and so it's a dangerous stock. Let's look at the previous one as well. So you can see consistently the equity is in minus since 2017 September. So it's a very dangerous stock. It's only operating um, exclusively on long-term debt since 2017 September, and then before that, even before that, um, the equity is positive, but still we are looking for zero point 0.5 ratio. So you can see that equity is very less according compared to long-term debt. You can just see vertically up, and it's a very dangerous stock. It's mainly operating on debt, I guess. And let me see that has it ever been a safe stock. So there are fluctuations of it being less than zero point 0.5 for a while, and then it comes back again above zero point 0.5 in the previous thing as well. So I would say consistently it's a very dangerous stock. It's operating mainly on long-term debt, which is not good. Let's go to return on equity. I'm looking for 8% or more than that for it to be brilliant. Let's have a look. Okay, I can see that it's less than 8%. So it's not the equity return I'm looking for. Let's look at the previous. So it's a minus return, minus return. So there's no consistency. I would say it's a minus, and you know I would say that there is a consistency since 2005 December up till 2016 June. There is a consistency of return being 8% or more than that. And then since 2016 December, there's a minus return, then there's a positive, then there's, you know, a minus, and recently it's a minus, and then there's a positive return. So recently, there's no consistency because the equity is in minus. So not because equity is in minus, but because there's no consistency recently. So that's not a good return recently.